proverb says, don't tell me how educated you are, tell me how much you have traveled. By that standard, my guest has had an outstanding journey. Using grit, determination, hard work, he's morphed himself from a scribe into a super stock picker. Let's go meet the erstwhile CIO of IDFC Mutual Fund, Kenneth Andrade.
The first thing that comes to my mind when I think about Kenneth and his tremendous achievements in investing is that he is certainly India's most thoughtful and consistently successful thematic investor. I think there are few who have the ability to think about the big theme logically, build an investment hypothesis around it, and then convert it into a winning investment. And in Kenneth's case, you can see that again and again. Kaveri Seeds, Page Industries, these are two vivid illustrations of how well he approaches, thematic investing. I think the other thing that I'd like to say, which has consistently struck me about Kenneth, are two other virtues that he has, which I think are absolutely essential to become an outstanding investor. One is humility and the other is patience. And in Kenneth, they combine extremely well and the results are there for everyone to see. And finally, I'd say something that has struck me over time, and Kenneth is a very fine illustration of this, is the temperament and the behavior that he brings, especially in dealing with adversity. I think there are few in this business who handle adversity as well as Kenneth does and has done. And to me, he is a role model for aspiring CIOs.
Ken, thank you so much for joining me on Wizards of Dalal Street.
Thank you, Ramesh, for having me here.
Ken, Buffett famously said once that he started investing when he was 7. Before that, he had wasted his life. How come and when did you start investing?
Well, the journey essentially started when I joined college. Okay, and that was just out of school and moved into.
Which year?
This was about 1985.
Okay.
And just about moved into college, got introduced to a couple of publications, and at that point in time, that was the only source of information that was available on capital market. Took the publication, correlated to my dad's portfolio, and found a lot of interest between the two and how stocks moved and what information was available about those companies. I think that's where the journey started off. The qualitative aspect gave you the longevity of the business, taught you how managements think, how businesses evolve over the period of time. And I think that's how the two things came together towards the turn of the 90s.
Yeah, and did you find that what you wrote about had an impact on the number of times it was oversubscribed or price on listing? Did you find a correlation there?
There was, significantly, because at that point in time publications had a huge mass following, especially for the IPO market. And if you go back to the 90s or even in the mid 80s, the IPO market was a very vibrant market. We used to have the CCI at that point in time, and used to have
control of capital issues.
Yeah, and there used to be a big markup on listings. So it was a fairly profitable exercise to anyone who could monetize that entire system. And yes, the impact on price discovery by publications was huge.
But how did you make the journey from a scribe at capital markets to a stock picker?
Well, the 90s, as we evolved through the 90s, and I don't remember seeing a single bull market which was sustainable over an extremely long period of time.
That's a great truth. No bull market is forever.
Yes, but the 90s was really an exception, because you had the Asian crisis. Which virtually took up a significant part of of that decade. So. Through the decade, you established yourself I established myself in building the breadth of the market.
What was that foundation of that stock picking career? In which firm?
I think the inflection point was in Sharekhan, where you had all the data, and then you actually went and put through recommendations
And you had an audience.
And you had an audience. And well, the impact that I must say in Sharekhan was much more than I had ever seen in the decade that went by, and that got the momentum rolling.
You're still young in your career in Sharekhan. At what time does Ken decide that this is a great business, but I need a philosophy to guide me? When did you come upon those learnings?
Well, money management came to me in Kotak. Okay, and I think the big change in Kotak and the great big learning curve in Kotak was when I overlooked a fund called the Kotak MNC fund.
Okay.
The universe out there was just about 51 companies. Okay.
Small universe.
It was a very small universe. And it was a fund that you, and if I could put it differently, you were put into a box, okay, and you had to optimize the box, and you got compared to everyone on the street. And that's where the philosophy essentially came together.
In the early years, which companies did you spot on that?
I think being or managing an MNC portfolio for 3 years, okay, and looking at each of these companies fairly minutely, establish the competitive trends of why MNCs over a longer term period sustain themselves compared to most of the Indian counterparts.
Why is that? What is the secret sauce?
I think one, they have the management bandwidth. Okay. Two, they obviously develop products which are much ahead of the
so R&D
exists, and they invest a significant amount of money in people in terms of building their distribution capabilities, in terms of building their capabilities in-house, and attract the best talents in the business.
These companies are never cheap historically on an earnings basis, on a cash flow basis. They're always expensive. So now how do you meld valuation with your picks?
Okay. I think they're always expensive may not be the right conjecture, because if I just step back a bit and look at my career in IDFC, one of my better unknown picks have been GlaxoSmithKline. Yeah.
The pharma or the
the consumer company,
right.
the SmithKline consumer company. When we purchased that company, it was at 12 times earnings.
Really?
Okay. If I look at another space out there, which was Bata, okay, that was a company which was at 15 times earnings.
But probably deservedly so. It had done nothing for 30 years.
Well, I used to track Bata in the 90s from a bit of the sell side matrix. When you opened the balance sheet in 2005, when you saw the complete inversion of the structure, you moved from a debt equity of like 3:1 to having cash on book and generating significant amount of cash flows. And the business matrix completely changed from being a wholesale business to a retail business. Managing an MNC portfolio, okay. If you eliminate the top 3, 4, 5 companies, which are obviously the most followed at that point in time, within the box, if you have to optimize it, the bottom end of the market was actually quite open for you. There was no ownership. Okay, the potential of the businesses were large, they're scalable businesses, and probably some of the best products that were available for the Indian market.
Coming. You know, one thing we can't eliminate: ads on television. We'll take a break, come back, chat some more with Kenneth Andrade on the Wizards of Dalal Street.